Good afternoon. Let's take a look at today's stock market. We had a bull trend day. You heard that right. The microphone's not broken. We had a trend day, meaning we were trending up the majority of the day. We haven't seen that in a long time. We were looking for a few key things. If you tuned into the pregame show, that's every day, Monday through Friday at 8:30 Eastern. We were watching for a break of Apple. It was 141.97. Tuesday's high. I'm just rounding up to 142. We were looking for QQQ to follow along, VIX to potentially break the 4-hour equilibrium bearish. And those are the three major things we were looking for a potential bull day. And then the lagniappe, the extra gravy on top, was NVDA went red to green on an ER, what was perceived to be an overreaction once they clarified that their 500 million or whatever it was that was shortfall was because of China and Ukraine. And it seems like everybody just kind of just had like a sigh of relief. And then they had the $10 billion buyback announcement, which was, again, a little extra that people weren't expecting. So they had a very strong day. Weekly lower highs for everybody is still on the table. So yes, we've had a good day, but that doesn't mean that the bulls don't have a lot of work ahead of them. So let's look at the day as far as the heat map. If we're looking at the heat map, consumer cyclical, otherwise known as consumer discretionary, really stands out. Amazon with a 4% day, Tesla with a 7% day, just green all across the board. So XLY is a huge component of SPY. And then we look at the semiconductors, huge green day as well. NVIDIA just lifted that entire sector. And I like to say that the semiconductors are the gas in the engine of SPY, and they were really putting fuel to the fire for the bulls. And looking at the overall sector summary, you can see that XLY had a 5% day. That is very unusual. I didn't have the time to go back and look at the statistics as to how frequently we have a SPY sector have a 5% day. I know it happens in energy here and there, but consumer discretionary, it's very odd. So we'll take a look at why that happened. But when you have your four largest holdings, XLY, K, C, and F, you have them leading. SPY is going to have a green day, and that's what happened. So let's take a look at our daily charts. So starting with the daily charts, I just want to highlight a few things. I like to note bull divergence in RSI. It doesn't mean it's a trading action for me. It doesn't mean take that trade. It's just another piece of information that goes on the bull side of the thesis. So looking at this RSI bull divergence, price made a lower low, while RSI made a higher low. So that daily bull divergence, I noted that this morning on the pregame show. I noted it yesterday in the chat room as well. So, and we have a daily inverse head and shoulders forming. Now, it's not confirmed. What happens here is anybody's guess on this right side, but we have two of the three body parts required for an inverse head and shoulders. So let me clear all that off and back up and look at the bigger picture. We're still inside. We're still having a weekly inside bar. For my chart setup, I use yellow bars or inside bars. So we're still inside last week's range. If you look at QQQ, we're still inside last week's range. IWM did something different. They broke their inside bar bullish. So IWM is definitely leading the way, and that means risk on. Okay, going back to SPY, let's make sure we covered everything. So we ended with a potential hourly bull flag. We got overbought. So typically when you're in an overall downtrending market like we've been, you start getting overbought readings on hourly or 4-hour. That's a time to top fish. So it didn't succeed today. We did have a little bit of consolidation, but if we were to gap up tomorrow, we may have a shorting opportunity, and we'll just have to be patient and see how that develops. Looking at QQQ on the daily, inside bar continues, potential inverse head and shoulders forming as well on QQQ. And we have that bullish divergence in the RSI. So looking at the hourly, we close with the hourly bull flag. Bears would like a gap up tomorrow to short, potentially short. And as always, you want to level to short. You just don't want to short because you think it's extended. Because we look at larger time frames, we still have runway. 4-hour, we have runway. And when I say runway, I mean RSI. Move this over. So we have runway left on RSI to run. The hourly's overbought, 4 hour is approaching overbought. So that's something as well to keep in mind. It feels extended, but we haven't seen green days. Red days, they can bring it down. The bears, NASDAQ, 300-400 points, no problem. If we see a 300-400 up move in NQ, we think it's extended to the upside because we're just not used to seeing that. All right, looking at Apple. Apple bullish engulfing candle developed on the daily. So yesterday, a lot of candles broke the high of the previous day. Apple didn't. I called it a stick in the mud. Well, today it came out and it showed the relative strength, and it's exactly what the market needed. When you're talking about a name that has a 2.3, look over here where my arrow is, $2.3 trillion market cap, you need that name pulling the wagon of the market, and it did today. It showed absolute leadership. So let's see. And the RSI has a daily inverse head and shoulders, not so much on the price action yet, but in the RSI, it's there. I just wanted to note that. The volume was not impressive today, but even with the volume not impressive, the bears didn't take over and they were given opportunities. So the fact that it was lower volume and bears didn't take their opportunity, that's something to somewhat note as well. So looking at IWM, we noted the weekly inside bar broke bullish. They had these lower wicks of bulls buying the dip, and they're getting over that daily 21 EMA. We're going to keep looking to IWM for leadership, giving us the indication that is a risk-on environment. And then one of the shining stars of the day, semiconductors. So semiconductors had this pattern prior to NVDA's earnings after hours yesterday. And then this morning with the slight bounce in pre-market and after hours, it was the go sign for bulls. We still need to break 240. A break of 240 would most likely confirm the inverse head and shoulders, and bulls want to see 247.19 taken out. And we're getting over that 21 EMA, and bulls want to see a candle close above those EMAs, not just straddled it. We want to see a candle close above it. And the shining star for semis was, of course, NVDA. We didn't close the bullish engulfing. We have a daily double bottom, but the volume was tremendous on NVIDIA. It shows that the bulls, this was a real move. So you look at volume and you say, okay, is this shorts covering? Is it just a dead cat bounce? Or does it involve shorts covering plus bulls buying? That's when you tend to see trend changes. Well, this kind of volume, it had to be a mix of both. You wouldn't see typically this kind of volume on just a short covering day. XLY, the star. So it's set up for an inverse head and shoulders. It's definitely the MVP. Amazon had a huge day, and Tesla, the two largest components of XLY. It's hard sometimes to remember that Amazon's part of QQQ and it's part of XLY, consumer discretionary, just like Netflix is part of XLC and part of QQQ. So had a wonderful day, and we want to see kind of touch that 21 EMA and then come back and take a small breather. Amazon had that bullish divergence, noting that we have this split. We had 20-to-1 split coming up June 3rd. And so we had a $1 billion dark pool that came in yesterday. I typed buyback. Of course, there's no way I can know that that was actually a buyback. I should probably have just put dark pool at 21.35.30. And I notified the room of that yesterday after hours. I reminded them again this morning before the market opened that there was a $10 billion buyback announced at last earnings. So that $1 billion, one could deduce that $1 billion was most likely part of the $10 billion buyback. So I think part of that lift was that dark pool buy, plus the shareholders approved the split. So just because the executives announced the split at the last earnings, shareholders had to approve it. And maybe this was the bulls saying, okay, this is going to happen for real. And we had some really tremendous buying. What was the beginning? What was our range? $104. That was a pretty nice day for Amazon. Looking at VIX gives me some of my better clues. I'm going to start on the 2-day. So we have a 2-day EQ. So the 4-hour, and when we say EQ at TheChartGuys, we mean equilibrium, and that's just balance, where price is balancing, probing liquidity on the top and the bottom. When you see these wicks, That is like a syringe effect. It syringes into those blocks overhead, absorbs it, and then the bears push it down. Same thing when you see a wick below. It's like a syringe. It syringes into that block of supply below, and then it pushes back up. So we have some tightening here as the bulls and bears probe liquidity. So we're not out of this equilibrium, okay, on the larger time frame. However, the 4-hour time frame, we had this mini EQ, and this morning we broke bear at 9:10 Mountain Time. We broke bear, and that was just such a bull boost. And I'm on the 4-hour candle, so it could have happened earlier than that. So sometime between 5 and 9 a.m. But this was such a bull boost. And I noticed that VIX sometimes gives us a heads up of a bear break, which could be a market bull move, and vice versa, because typically VIX in the market run inverse, not always. Looking at oil had a huge day. So let's see. We closed with somewhat of a 2-hour bull flag. Looking at the weekly, we have not broken over 116.43. We need to take out 116.43 for continuation. We have a nice rounded bottom of bulls buying that dip. Nat gas confirmed the weekly bull flag yesterday. However, the bulls or the bears were a fly in the ointment today. We closed the day with somewhat of a tweezer top, meaning 2 upper wicks of a double top on nat gas. And we've seen nat gas where it looks like the bears are really coming out swinging and the bulls just go erase them in one fell swoop, which could happen. But this was a rather large pullback today, almost 9%. So a lower high would be anticipated on the hourly and the 4-hour on a bounce. So nat gas bears could be looking to top fish, but be protective and be ready to be wrong. You don't want to get squeezed with naughty gas. The dollar had some weakness today, and gold didn't take advantage of it. So let me show you that again. Better to look on the hourly. So on the hourly, we have a downtrend. Well, gold just EQ'd out. Has an equilibrium, can't take out 1852. We're below the hourly 50 MA. So I know the gold bulls have to be frustrated. The dollar weakness just keeps opening up the doors for the gold bulls, and they're not going through the door. And overall, we have to remind ourselves we're looking for a weekly lower high on gold. So that will be the most likely outcome of any type of bounce play anyway. So gold bears, I would take it easy for a little bit, but this bounce is not really proving much for gold bulls, and they're not doing it on volume. All right. Well, that's it for me for the market wrap up. Thanks for letting me fill in for Dan.